All right. Ted, thank you. Omar, welcome. Thank you for joining, and sold crisp and clear. Thank you. I've been told that my headphones don't work. I don't know why they work here, but don't work on other broadcasts, but that's okay. All right. Begin shortly. Huh? All right, Discord guys, can you see my screen? Yes, there's the trailer. Trading live now. Okay, I think we can start. All right, Amar can see. Amar, thank you for joining. Appreciate your subscription. Bill, welcome back. Tim, Tom, Ted. All right, we have a lot of people. Peter, Alone, Angelique. Angelique, welcome back. David, Harman. Horizontal scanners. YouTube, welcome on YouTube. Thank you. Please hit subscribe button if you haven't subscribed yet. And let's start. Welcome to Tradespoon in Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. If this is the first time you see the disclosures, I encourage you to visit you can pause the screen and visit the link on your screen, optionscreening.com, so you can understand the risk associated with trading stock or options, and that I am not an advisor. I'm here to show you what I do in my own account, in production, using my own money for general education and information purposes only. All right, trading psychology is important. Again, very important to have a trading plan, and especially for those of you who are new, right? Some of you already heard this. I repeat this every day, but I think it's important, is to concentrate on things that you have control over versus things that you don't have control over. $500 billion AI package, right? Where major private companies are gonna invest into the future of AI and US infrastructure. And John just says Oracle, Cisco is one of the beneficiaries. You don't know when this announcements will happen on the package or how people will react to this. But what you can do is concentrate on things that you have control over, right? What do we have control over? Cash. I propose 30% of the portfolio in cash. We still haven't generated new signals. We're close to all-time high, but still trading sideways. Rates are still elevated. Dollar is still elevated. So I would propose to be maybe market neutral, maybe slightly bullish bias. So with cash, right? 30% of your portfolio, one long position, have one short positions, or if you trade in options, maybe spreads, butterflies, mirrored puts, and then look at the position sizing, right? Look at the exposure, how, do what if scenario. If the market drops, reverts back, right? 5-10%, what will my portfolio look like? And where's the drawdown? So that's takes time and practice to get the number of position size correctly. Fred, good morning. So I propose to have 4 positions at a time, especially if you're new to trading. I would start with no more than 4 positions and maximum exposure of 2.5%. So it's not number of shares, it's not number of contracts, it's you go through the worst case scenario and you basically say at that level, if I'm down 2.5%, I will exit my position. How do you calculate that? So we do provide tools. You can look at Stock Forecast Toolbox. and look at the trend analysis. Market model still shows negative trend, basically slightly negative bias, saying that yes, best case scenario we can get to 610 level, all-time high on S&P. Worst case scenario we'll revisit not the lows anymore, but maybe 584 level. So that would be my thought process. So 610 all-time high. We are getting close. We're at 605. This is my overhead resistance, right? And then my support is, it says 585. Yeah, let's sign the gap, the start of this rally. So short term, I think model set 595, 50-day moving average. I agree. So if you're doing day trading, I would use this as a support one in case we do have a quick reversal. Support number 2 is the 10-day. What the model says 585, and I guess if you're more conservative, then I would use, this is as a support number 3, right? So if you don't like to make quick decisions and you like to hold the positions for a couple, I would say weeks, couple months, I would use 565, right? This is a long-term key support for the market. As long as we're above that level, we're still trading in an uptrend, even though we did break the uptrend briefly, but we potentially could resume the uptrend. So, but for now, the long-term uptrend is intact as long as we're above this key level 565. So if you day trading support number 1, we're at, let's say you enter the position at 606, I would use maybe 10 points, right? 596, 595, I would exit. So that's 10 points if you're doing day trading. If you're holding position for a few weeks, right, I would say 595, right? 20 points is your stop loss. And if you more of a longer term investor or holding position longer time, I would maybe use 30 points, 575, 30 points, right? So depending on psychology, what your comfort level. Some people trade all 3 timelines zones, holding periods. Some people just day trading. Some people only do kind of a quick swing, momentum trading. And then if you have $10,000 portfolio, this is average $10,000 portfolio, or if you're doing day trading, you have $25,000. You need to have $25,000 if you're opening and closing position the same day. Then on day trading, I would use 1% as your stop loss, which is $250 or less, right? And then on $10,000, I would use 2.5%. That's my proposal, right? I mean, you'll get different opinions, but nobody's going to say put 20% of your portfolio in one position or 10%, right? That's too much exposure. But 2.5%, that would be of $10,000, right? That's $250. And 1% of 25, $250. So then you take $250, you basically say, okay, market is going to be at all-time high, it's going to break out, we have AI, stimulus package, soft landing, interest rates are pulling back, great. Then 10 divided by 250, then if you do day trading, I would use maybe 25 shares. Right here, I would maybe use 12 shares. Right, 250 divided by 20. Here, I would use 30. No, what is it? 8 shares, roughly. Right. So it's not number of shares, it's not number of contracts. It's what is the maximum exposure per position and how many positions can you have. This is the most difficult task, right? Even if you trade for 10, 20 years and you have a lot of experience, you always pull between traction, right? Fear of missing out. Train is leaving, right? AI is here. And we're going to spend trillions of dollars on AI. And then the next day, fear of future regret, right? We have inflation, right? The rates are going to 5%. Trump will impose 60% tariffs on China. And, or we have, we're in stagflation. I was watching these podcasts. Some people think it's the new administration that caused inflation. Some people think that this is just the populism and, structurally, we need to print more money. Some people think it's debt. Some people think it's interest rates going up across the globe. I mean, you'll hear different opinions, but that concern is still there, right? So on one day, based on news, fear of missing out. The other one is fear of future regret. How do you deal with this? Number of positions and position size. Okay. Any questions in terms of how to calculate the exposure or the risk. Meanwhile, most important chart is 10-year yield. Have a nice drop, 4 days in a row, lower lows, lower highs. That usually means we're probably close to the top, right? I mean, can we revisit 4.8? Sure, right? If we have tick up in the inflation next time, or a tick up, more jobs being created, inflationary pressures, then we could have jump. I think next news is manufacturing services and manufacturing data on Friday. If that comes harder than expected, you could get to 5%, and then market will probably pull back. But right now, the most important chart, I would say, 10-year yield. As long as we are above 50-day moving average, there's no new signal, right? We're kind of trading sideways. The rates have to pull back further. And obviously, right now, more emphasis is on earnings. And so far, earnings have been better than expected, right? You can see the reaction to Netflix, but that would be my approach. Looking at the 10-year, looking at the dollar. Dollar also had a sharp pullback after the new administration took over, and now we are at 108 level. Elevated. Dollar is elevated, probably has a negative effect on earnings, but so far nobody has mentioned that or had an excuse. Like, let's see, even Procter & Gamble is up, I think, today, conglomerates, right? So strong earnings from Procter & Gamble. I think Johnson & Johnson actually down 3%, and Netflix is strong move to the upside, to the 1,000 level, right? We talked about 1,000. A lot of open interest was at 1,000 level strikes, up 12%. And the United Airline is at 115. So United Airline is one short-term trade that I do have. You can find it on Yellow Tunnel or Tradespoon. So on Yellow Tunnel, you will find it under Earnings Power Trader. Right. So the idea is to find the next difficult task. If you're trading options, if you're trading in general, the most difficult task is position size, right? Get the position size correctly, right? The second, if you're trading options, the hardest task is to find the right strike price, right? So in Earnings Power Trade, I did United Airline. So I sold the credit put spread 97.99, collected 42 cents to finance calendar spread, right? Calendar spread. Basically, I am buying next Friday expiration for United Airline, and I'm selling this Friday at the strike 115 because it wasn't a lot of open interest, right? You can look at basically the idea is going back to game theory. It doesn't matter what I think, right? It matters what everybody else thinks, or majority of the people thinks, when it comes to trading or life in general, I guess. If you look at the United Airline in terms of gamma exposure and the positioning, one standard deviation move, right? Yesterday, one standard deviation move was I think 10%, right? Close to 10% average move in United Airline. Gamma exposure was, you have very large position at 120, and before that, 115. After Delta Airline and run up in United Airline, I didn't think we're going to have a 2 standard deviation, so I selected 115 strike. So if you look at the calendar spreads, profit and loss diagram, you can see that the maximum profit occurs, we use our fidelity, occurs at the strikes you selected, right? So in the perfect world, the United Airline will stay at the 115 strike. It will stay at 115 strike, and the short-dated option will expire worthless. And then you do have a time decay for the longer-dated option, right? You have different expiration. One expires January 31. Right, and one expires this Friday. So in a perfect world, you want the stock to stay near 115, right, kind of being pinned at 150 strike. The short option will expire worthless, and then there's a time decay for long dated options, right? You just look at the theta multiplied by number of days, but it's kind of like an ice cube that just melts. But if we do expire, on Friday, close, or we stay at close at 115 strike, then this would be a profitable trade, right? It would be a profitable trade depending on the time decay. What did I pay for the longer dated options? Let's see. So longer dated option right now is trading at, so longer dated option right now is trading at, so I bought it at $3.63. $3.63. Right now, the trade is profitable, so you can close it. What is it trading to? A pretty wide bid and ask spread. Okay, we'll see. No, you can't. So it's trading at $1 right now. And I collected 50. Oh, no, sorry, I paid 57 cents. This is a debit spread. So I paid 57 cents and I can close it probably at $1. So let's try to close it at $1. Of $1. Let's see. Okay. And then I would take the credit put spread. I mean, most of the premium already expired because the stock moved. So I will try to just close it for 3 cents and get out of the debit spread. Okay. So United Airlines trading at 114. I'm trying to close the debit spread. The debit spread that I paid, right, 60 cents. I bought it for 57 cents. I'm trying to close for $1, right? Collect, I mean, almost 100% return, right? 80% return on United Airlines, the calendar spread. And then on the put spread, I sold it for 42 cents, tried to close it for 3 cents, right? And collect premium on both sides. But, for that trade to be profitable, it has to gravitate toward the 115 strike, right? And stay near that strike. Or you don't have to wait, right? I mean, right now it's trading what? $1.60. Let's see, maybe 90 cents. I can close it for 90 cents. Let's see. John, thank you. Oh yeah, 90 cents. Okay. So you can wait, right? And I mean, if you want to hold United Airlines, right? If you think this is a confirmed breakout, right? You can usually wait 15 minutes. I like to wait. We're close to that. All right, let's do a 5-minute chart interval. So you can wait and basically say, Vlad, it's not going to drop. 115 strike is pinned, and we're just going to trade around the strike, right? Kind of like we did with Schwab yesterday. We did the Schwab trade yesterday, right? It opened up after the earnings, and basically it traded higher, traded lower, and right now not that far from that strike. You basically can say, Schwab is doing well, right? Wealth management, people have money, they're investing. The United Airlines chart will look similar, and we're just going to gravitate toward 115. Then you can basically wait, right? You wait till the short put expires worthless, right? Like let's assume this Friday it expires at 115. Well, the short call will expire worthless, but the long call will still have premium, and the idea that it has more premium than the debt you paid, right? That's why you have this kind of not a linear relationship, because of the time decay, right? It's like going back to your chemistry class. You put an ice cube and it starts melting, but it doesn't melt in the same rate, right? The rate accelerates, as you get closer to the end. So that's one approach. The other approach, just say, listen, I don't want to wait. I bought it for, what did I buy it for? 57 cents. I'm closing for 90 cents, right? Collected 33 cents, basically 50% profit. But in addition, I collected 40 cents on the credit put spread. So that's United Airlines. You can find this trade here. You can also find this trade in the if you're doing the Tradespoon under trade log, right? You can enter your phone number under SMS message. You can watch the recording, right? I do talk fast because I have to look at the trades and just my natural inclinations to talk fast. And you can review these trades. And now I'm out of Amazon, Renata. So Amazon also got triggered 232. I'm at all-time high, so I'm out. So I'm out of United Airlines. I'm out of Amazon. Netflix didn't really work the way I thought. I kind of did the same approach to Netflix as I did to United Airlines, but the trade, instead of moving one standard deviation, right? Netflix, if you look at Netflix, average move is 7%, right? So historically, in the past 4 quarters, if I looked at Netflix, it moved close to 7%, right? The expectation was 7% based on demand for options. Its expectation was 7%. Average move is 6% in the past 4 quarters, but they hit a home run, and the stock is up 2 standard deviation, right? So if you look at the Netflix, we're up 2 standard deviation. And you actually have to move more than 20 strikes, 50 strikes. So I thought it would stay with 1 standard deviation, but instead Netflix moved. After hours, it was at 1,000 level. It's pulling back. If it does pull back to 950 level, the strike that I selected, then this would be a profitable trade. But if it moved 2 standard deviations, I'm non-profitable. So this is the difficult part of these directional strategies, right? When you pick a butterfly or a calendar spread, you have to look at the positioning, how people are positioned, where's the high concentration of strike prices, right? So you have 1,000, right? I think yesterday 1,000 was the biggest open interest, right, after the money. So on the really good news, it moved 2 standard deviation. On average news, like United Airlines, it would move 1 standard deviation. Any questions on United Airlines or Amazon? I did get into Citigroup 75.80 call yesterday at 365. I think banks will continue to outperform at least value stocks. I don't know about technology stocks, high beta stocks, but Citigroup, strong momentum. I think that continues. I did buy spread, $3.65. So I do want to have exposure to banks. Schwab yesterday I closed, made 25 cents on the stock, and I think I made, broke even on the spread. So that's the trade. Those are the trades from yesterday. Oracle, Cisco are moving higher and better than expected. AI stimulus. Yep, Cisco is an uptrend breaking out. Oracle in the uptrend, reversing some of its gains, right, from oversold condition, but obviously under above average volume, positive news, and close to all-time high. Close to all-time high for Oracle. Thank you, John. Fred, good morning. Great Wave 5. All right, let's review some of the Fred's favorite stocks. BSX. BSX continues to grind higher. eBay, kind of flat. And okay, and then finally, I'm drawing blank. Sucks. KMI, sorry. I think earnings are today. Yeah, after the close. After the close, and they're down 70 basis points. All right, any questions? Meanwhile, QQQ is up 1% and better than expected news from Netflix. Strong momentum, trying to reclaim all-time high. Right, semiconductors are up 2%. Also breaking out, that's positive, right? The one of the head scratchers is usually semiconductors leads. In the past couple of years, at least, semiconductors were leading the rallies. They're falling behind, right? It was the idea that there'll be some kind of a digestion period of AI, but from yesterday's stimulus package, that digestion looks like over, and AI did break. Semiconductors did break the downside and continues to grind higher on its way to reclaim all-time high. And I assume NVIDIA is following the suit. Yeah, and NVIDIA is up 4% at 146. Okay, so semiconductors are back. That's really good news for the bulls. Amazon just closed Amazon position. It's at all-time high, right? Trying to break out. You have news in 8 days, so at this point, it's a binary event. I mean, if it's like Netflix news, then obviously it will go higher. But if it's not, then there's a risk, right, that it can revert back. What are other favorite stocks? Renato's Tesla, right? Tesla digesting earnings is in 7 days, down on the update. That's usually not that great. So Tesla is, and it's still above 50-day moving average, but underperforming QQQ. Tesla is underperforming QQQ, and Pelletier, I assume, is up. And Pelletier is up on the news from yesterday on the $500 billion, half a trillion AI plan. Okay. Any questions? So those are most popular stock. Let's see how's the rest of the Magnificent Seven are doing. So United Airline, 113. Let's look at United Airline. Okay, so it's recovering. So that's kind of, let's look. This is where, if you sell, if it's closing the spread, you can just close the short 115 call, right? What is it called? What is it trading right now? United Airline. The 115 call, it's elevated, so it's still $1.80. And then, you leave the long call with the idea that it's going to continue to rally. So there'll be a second approach, right? Kind of break the legs. But then you're risking that, it did get to 111, right? It basically closed the gap, so it's pretty volatile. And then the other earnings is Johnson & Johnson. Let's look at Johnson & Johnson. So at 142 strike. All right, any questions? Let's see, great. Discord, guys, how's the Discord doing? Elmar, Cherry Blossom, Hydrated Muffin, welcome. Best in case, I'm not sure is the best. Sure which one is the best for me. Amar, I mean, I would start either elite, either on yellow. The elite service is very similar to platinum on yellow tunnel, where you have access to these services, right? Paid is kind of a just standalone service where Keith and I manage, but these are platinum. You get access to these 5 services versus elite. They're similar, so you can go with elite on Tradespoon, or you can go with the platinum on yellow tunnel. They're very similar services. The difference here, elite could be a little bit overwhelming, right? Because you have all these trades, right? Like today, right? 1, 2, 3. Yesterday, 1, 2, 3. It's very hard to differentiate like which trade you want to do. So if you're new to trading, this is probably overwhelming, right? Because you have to pick and choose. So the idea of yellow tunnel, we segregate them. Earnings. If you go to earnings power trader, you only see trades on earnings. If you go to profit accelerator, you only see trades on stock. And if you look at the dynamic power trader, you only see trades on, stock and options. So at least you can segregate it, right? And you can just say, I only want to allow option spreads using earnings, right? So okay, so then you're only going to see that, right? Earnings, right? But if you don't want to see the earnings, you can go to dynamic power trader, right? And you're only going to see, stock trade and option trades, right? So that's the difference, right? I don't know how many years of experience you have trading, but that's what I would use. If you wanted if you knew and you just wanted to simplify and segregate, I would use yellow tunnel. If you just say, listen, I know what I'm doing, I just give me as many signals as possible, then I would use this one. Amar, 2 years. If you've been trading 2 years, I would just use elite circle, because the advantage here, you basically see everything. You have access to all the Tradespoon tools, right? Signals, like you can go to active trader and look at the signals for today. So we have regional banks. I did Citigroup, but another idea of regional finance. Industrial, right? Fastenal, FAST. Industrials are an uptrend. Some of the like Procter & Gamble, Philip Morris are an uptrend. So you have more ideas and more signals, and then you can manage them, right? So you have access to active trader, weekly trader, monthly trader, right, on elite circle, and then you have stock forecast toolbox, which I showed you. So if you have 2 year experience, I would just use this. Do you both use Discord? Elite uses signals. You can do SMS or Discord, and we do have a broadcast on Discord. I can send you. So we do have a broadcast for both. Thank you, Amar. Percent open option position, reason to close. 50% loss of an option position, reason to close. Usually it is, Ted. If the option is down 50%, I would usually close, right? With paid, we're structuring a little bit different, right? We basically say we're going to open on Tuesday and close on Friday no matter what. But that's what we'd suggest. But in general, I would use 50% loss as a stop loss. That, yes.
That would be great.
Amar, thank you for participating and joining. I really appreciate it and asking questions. All right. Johnson & Johnson looks like trading between 144 and 142. United Airlines did pull back, right? So it's kind of losing momentum. Let's see. SRE pulling back after a rally. So let's review the rest of the position, right? So we'll use elite circle since Omar is asking these questions. So on both sides, but here you can see all my orders and all my positions. So let's review the other positions. Citigroup, that's a new position in March. So now my goal is to close the February positions, right? Manage February position, probably 10 days before expiration. as we get closer to February expiration, you want to close your February position. And if you're opening up new positions, I would go into March, right? Unless you're doing, short-term trading. So I'm long Citigroup, 75.80 call. Energy, still bullish on energy, even though it is drill. Crude oil prices did go down. OK is pulling back, but this is kind of combination gas, right? We do need energy, right? This is one of the #1 priorities for the new administration is energy. So I think OK will, this uptrend will continue. So still continue to hold OKE. Schwab put spread expire worthless. SRE, I did an SRE position. Utilities have rebounded. Short term, they're overbought, so it makes sense that they pull back. But I think at this point, the lows are set, right? Somewhere between 78 and 80 is your lows. But we could revisit, especially if the rates continue to drop. That's kind of a big if. But if rates do stabilize and continue to drop, I think utilities can continue going higher. But the rates have to continue to drop. Omar, appreciate it. Thank you, Ted. Thank you, Omar. Discord, Rosser, good morning. Any other questions on Discord? SEO meeting. Okay, any other questions? Right, let's review the other positions. Let's see, who's going to do closing bell? I will do, okay. So Keith will do the closing bell. Okay, so Keith will do the closing bell. Let's see, what else? Okay, so SRE, Tesla. I'm still holding the kind of a merit put. I have a Tesla position and a put spread. Tesla has been underperforming, maybe short term. Medium term, obviously, it's outperforming. It went from 200 to 500 in a few months, but it's definitely now period of digestion, consolidation. It will resolve either to new all-time high or pull back potentially below 50-day moving average, right? Tesla is a volatile stock, maybe 10% move average 4 months for earnings. Let's see if I'm right. Average, okay, even more, 14%. So 10 to 14%. So Tesla could drop, $50 to maybe 375, right? It could be revisiting the lows or revisiting the highs, right, after the earnings. I mean, I'm a Tesla owner, so I am biased. I do see how easy it is to buy or finance. Like if you look at the lease right now for Tesla, it's probably one of the cheapest leases you can get there. If you're looking for, $30,000 to $50,000 car, right? Because they're giving you credit and they have zero, low finance, and so the numbers could be better than expected, right? But they have exposure to China and they have a lot of competition from China, so it's hard, right? It's hard, and they did underperform last year. So I don't know. I mean, I think it's a flip of a coin. Yeah, it could be 475, it could be 375. For that reason, I'm gonna keep the put spread and keep the stock. Twilio has been a signal. It's another spread position that I have. It's looks like it's again pinned to that 115 strike and consolidation, trading between 105, 115. Earnings is in 3 weeks. So for now, I mean, time is on my side, right? There's a time decay. So as long as it's in the money call, then every day the spread should be more and more profitable. Right now, what is it trading at? Twilio. Twilio is, I mean, it's pretty widespread, I would say. Yeah, it hasn't really moved much because it's, unfortunately, options are not very liquid. And Texas Instrument announcing earnings tomorrow or today. Let's see. Texas Instrument going into earnings tomorrow, right? I mean, similar to Tesla. I mean, it's weak and underperforming, It's reclaimed 50-day moving average and 200-day moving average, but it does have let's see, how much does it move? 4%, right? So it could move 4%. I mean, it's volatile. I've seen it move, 7, 8%. But 5% would be what, 210, right? So it could be 210 or even close to all-time high if they do have a good earnings, or it could revert back to the 188 level. Let's see. I do have a. Maybe it makes sense to buy a put spread. So in case it does drop 50%, I mean 5%, which is possible, I can do vertical. Let's see, let's do custom. Okay, so I want to hedge myself. Let's see, we'll go to next week or something that doesn't move. I'll do monthly, so it doesn't move as much time decay wise. All right, so let's say 5% would be what? 190. So I can buy one, let's see, 190. Or hedge 195. Let's see, 195. 195.
I'm gonna find that out.
No, it's expensive, so let's do 190. 190 to 185. Still expensive, right? Texas Instruments are expensive. This week, 195. Let's see, 195.
Oh, you lived there.
So if I'm buying the 185, selling 190. $0.30. Okay. I like the, oh, February, January. Sorry, January.
So,
190.
and how do you?
So to open. That's $2. So it's pretty.
Wow, brilliant. All right, let's.
It's pretty expensive. Okay, so I'm just gonna wait. I don't have a large position in Texas Instrument. If you have 50 shares or 100 shares, I would buy a put spread. But if you have, like me, maybe 10 shares, 15 shares, then I would wait. All right, that's all I have for today. You guys are awesome. Thank you very much. Omar, welcome. Thank you for joining. Hopefully you can join us tomorrow as well. And some of you closing bell. And that's all I have for today. Thank you very much and have a great day.
A lot of the markets are in both baskets, and I just omitted some of the ones that just really haven't performed well. So, for example, corn is in both market baskets.
Thank you, Angelique.
5-year notes is in both. Mini nat west is in both. The sugar are all